The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. But boy, last night, folks, we had some trading going on last night. The Bank of Japan, they were out there. You have the yen, the dollar, yields, the markets accelerating, man. 10 o'clock. S&Ps trade from 38.51 down almost 50 points from about 12:30 a.m. Eastern Time. We reach a low of about 3,800. And just like that, we've rebounded a bit. We're trading at 38.36, down about 9 points. In the S&Ps, NASDAQ 100, we're negative by 59 points right now, 11,133. You were as low as 11,043 last night. Folks, if you haven't checked out the Tiger's Den, okay, I was in there last night. We had traders in there last night. You had some action last night, and it's pretty cool that the Tiger's Den is now operating even after hours. And boy, we had some action across the board, folks. Let's jump over to the dollar index. There was your action on the dollar index. You see the drop off from about 104.70 down to 104. We jump over to the dollar yen. That's where all the action was taking place, man. How about 137.50 down to 132.24? That, of course, putting a bid in the gold contract. So what do we have? We have, and we're going to jump around to the fundamental news and Bank of Japan in a moment, but we have a weaker dollar, okay, a weaker dollar yielding a higher gold contract right now. You have a stronger yen as the Bank of Japan comes in, talking about the yield curve, and why don't we jump over to the headline right now? Shocks global markets. I wouldn't say it's like the biggest shock of all. I mean, the yen's been pretty hammered right now, but the Bank of Japan caught markets off guard. That would be a correct assessment. By tweaking its yield curve control policy to allow the yield on the 10-year government bond to move 50 basis points either side of its 0% target. In that statement, the move is intended to improve market functioning and encourage a smoother formation of the entire yield curve while maintaining accommodative financial conditions. So they're going to allow 50 basis point swings on either side of the 0% target, up from 25 basis points is what they're going to allow. Intended to improve market functioning, the central bank introduced its yield curve control mechanism in 2016 with the intention of lifting inflation towards its 2% target after a prolonged period of economic stagflation. So the BOJ, yeah, an outlier compared with most central banks, man. They've left the interest rate at negative 0.1% on Tuesday. That's what they left it to. They vowed to significantly increase the rate of its 10-year government bond purchases, retaining its ultra-loose monetary policy stance. In contrast, other central banks are continuing to hike. But boy, you talk about a quick move, man, in pretty dramatic fashion. We jump over to our yields. Okay? So what do you got? You have the yield, you have the price dropping off, dealing to higher yields we're looking at. And boy, folks, I mean, this move, maybe that was the move that needed to take place, man. I've been talking about the channel lines. That's a pretty decisive break right at the top of the channel line. That may mean, folks, we have lower price and higher yield coming at you right now. A quick rejection of the upper boundary line on the 10-year. We're at 113.17 right now. And we'll jump over the yields, but lower price, higher yield, and interesting in terms of how this plays into everything right now. So you actually have a weaker dollar with higher yields. But what's happening, man? It's all about the yen. And the yen, of course, putting a lift. I mean, look at that drop off, man. And folks, channel lines, an ode to our man Bud Rolfs, the channel master. And like, look at that top one, man. What a sell, right? From 151.93, and even if you were talking about, now I don't know if you could have withstood that acceleration out of the channel line just for that spike, but boy, the candles, they line up right at the upper boundary. You accelerate through that area on November 10th, and this brings us back, folks, almost to April prices on the yen. Amazing, right? You get a run like you had. I'm going to back this up again, the yen. where you traded from 114 to 152. You did that from basically March 7th is when the run began, up to 150, back to 132, right? And we give up. We give up to the point where in April, folks, we were trading at 131.24. We just got to a price of 131.98. Absolutely remarkable how quickly the market can take it back sometimes. That's a quick reversal, to say the least, man. And yeah, we'll see where we go from here. Ooh, got something in my eye. We'll see if I can get it out. Can we get it out? I think so. Okay, we're all right. It's going to be an interesting day, folks. Anytime you get this type of market volatility overnight, yields, currencies, interest rates, right? It's everything is there for the taking in terms of some volatility. Now, I was talking about send out a update to my subscribers, Rocket Equities and Options yesterday, and folks, I've been talking about on this program, man. I mean, everything that keeps happening, this drop-off, there's nothing preventing this market going from 3,200, man. There is absolutely nothing preventing it in any way. We start dealing with a weaker dollar, right? You're going to see other central banks that can come into this. We talked to our man Teddy Kegstad tomorrow. He writes the Tiger Forex Report. Great newsletter about Forex, ties in some commodities, ties in bonds, notes, yields as they matter in the Forex market. And he was making some great points last week. Can't wait to see what he has to say about the yen, man. But making some great points last week saying, hey, you know, when you're talking about Europe, right, the ECB, the Bank of England, if they go higher for longer, that's going to boost yields over in Europe. That's going to put some strength in the euro. That's going to put weakness in the dollar. And what is that going to do? That's going to cause inflationary tendencies in the U.S. when we have a weaker dollar. That may be what we're seeing a little bit of right now, right? Because what happens? We're seeing other central banks come into the action. We're seeing that matter over there. We're seeing that potentially hit the dollar. But meanwhile, we're dealing with higher yields. We have a weak dollar, and we have higher yields to go with it. That has not been the trend, folks, okay? That has not been the trend. The trend has been a one-way trip to a strengthened dollar and to lower rates. Higher rates, right? Lower price, higher yield. Well, what are we getting now? We're getting a weaker dollar, and we're getting the 10-year right now pulling back 22 ticks, and the 30-year pulling back a full 0.24 ticks. Interesting action. You got the 30-year rolling over basically the top portion of that channel line as well. 128 right now, that 30-year. And we jump over to the volatility index on a very volatile day to start things off as we are 17 minutes from the opening bell. And the VIX is not moving. I don't know what's going on, folks, but the VIX, I was listening to Bloomberg a few days ago, maybe over the weekend, saying right now the VIX is kind of broken because it's not operating in the way it has. And why that is the case is up for discussion, but it's not moving. And it's stuck at 2250 right now. And maybe that means everybody that's got their insurance in place isn't selling it. They aren't buying it. They're not moving the price of that premium for the S&P. But nonetheless, the VIX sitting at about 2254 when in, you did see a spike last night, okay? And we've pulled back to where we were as the markets have pulled back a bit. But boy, it's going to be an interesting one, folks. We're going to have an interesting trading day anytime you're digesting that type of move. It was interesting, man. I was in the den last night. I couldn't help it. The markets were moving, man. They were moving. They were shaking. Said, what's going on? Said, the Bank of Japan. They're going to work, man. They're roiling the international Forex market. Stay tuned, folks. We had a lot to talk about. We're coming back with our man, Kevin Hincks. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures down about 10 points right now. That's 0.25%, trading at 38.36. Let's jump over to our man, Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network. Fast Market with your host, Kevin Hincks, Tom White. And boy, let's just jump into it, man. We had a fast market last night everywhere. We got a fast market this morning. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Haruhiko Kuroda. Who'd have known we'd be talking about him this morning, the governor of the Bank of Japan, because that's making a lot of the news this morning, Tommy. What they did over there, finally, it seems after years, you can make the case since 2013 that the Bank of Japan has been, fighting deflation and buying bonds and keeping rates low. Remember, they were the first ones in 2016 to take rates negative, actually. Now they came out and, full disclosure, they said we're not raising rates, but what they did, they raised something called the tolerance range, which how much they allow rates to fluctuate in their range. So pretty interesting, and that's got the dollar moving down against the Japanese yen up. Last time I looked, it was up about 3.6% this morning against the U.S. dollar. So that's interesting. Is it helping stocks? Not really, Tommy. They've got their own game plan here, which is to remain heavy into the end of the year. So breaking news out of Wells Fargo, paying a big fine to the CFPB, $3.7 billion. That's another just ding in the armor of Wells Fargo. But we in a week that is marking the end of earnings season, Tommy, we'll get Nike, FedEx, Carnival Cruise Line tomorrow morning. We got some good names coming out after the close today and tomorrow morning.
I didn't even realize those companies were coming. I should have, man. Nike, FedEx, with two of the perennials, as you've taught us that they wrap up the season usually, two of those. Yeah. Back to the Bank of Japan, pretty interesting. I happened to be in my office, Kevin, last night. Took a peek at the Thinkorswim platform last night. Saw the futures drop off. So what's happening there, man? It was about 10 o'clock Eastern time. Jumped into the Tiger's Den, and sure enough, then Bank of Japan. What do you think, Kevin, of the fact that we got dollar movement in a big way this morning? Yeah. You have the dollar lower, so you got dollar weakness at the same time that we have some higher yields. That hasn't been the case as of usually. I know it's very dependent on what we have going on, but it is interesting to see the different factors in play right now. When the Fed was the focus and we were the only one in the game, basically, right? You had dollar strength with the higher yields that we had. And right now you're seeing kind of a little bit of a difference where we got the 10-year down 23 ticks right now. We got higher yields. Meanwhile, you have the dollar pulling back. What do you make of that relationship as we maybe go forward and we see a different market maybe than what we're used to, as number one, we're not the only game in town, but the factors shaping this market may be changing a bit. What do you think of that relationship?
Yeah, Tommy, in the hawkish contest, you can make the case that Japan has been non-existent for years, right? They started buying bonds in 2013, and they've been pretty much keeping to fight their deflation. They've been, their inflation levels are way lower than the rest of the world still to this day. So the fact that this came out of nowhere and sets, it's certainly a tone change, but it sets a little, it's counterintuitive here because you've got rates higher, you've got crude oil higher, but there's that lower dollar. And Tommy, we'll see how it plays out during the day. If that causes people to be a little more willing to buy a dip here or willing to, that may take some of the bite and the weakness out of this market. We'll see how it plays out because, frankly, Tommy, Japan hasn't been here. They haven't been in the currency markets, in terms of what the rest of the world is doing for a while. So I don't know how it plays out. We'll watch and see how it does.
It's interesting, man. I couldn't, last night and then seeing how the markets are reacting today. We got the opening bell coming up in about 7 minutes, and the markets have a lot to digest, man. And remarkable that we got the move down to almost 3,800. And then if you had woken up this morning, folks, you didn't see the action last night. We were basically flat within the last hour or so. So interesting action, especially as we're coming in, man, 5 days from Christmas. We got a little bit of light trading that could throw a little fuel on the fire in terms of volatility potentially. Kevin, you mentioned some of the stocks that we get coming out as we wrap up this earnings season, wrap up the year 2022. What are you guys talking about on Fast Market at 12 today?
Like Folio's going to do a presentation on Nike, so we'll, of course, look at that. We already did FedEx yesterday, so we won't do that. We'll certainly look at Carnival Cruise Line coming out with earnings before the morning. And then we're deciding on what the third one is, probably something similar to Nike. That's what we usually like to do. But, Micron is tomorrow after the bell. We'll focus on that for sure and nice. All that. And CarMax is still coming out this week. But we're at the end of earnings season, Tommy. As you know, names are a little thin here, but definitely Nike, definitely Carnival Cruise Lines.
Those car companies, man, that Carvana story is just something else, man. CarMax, obviously a different company, but boy, reading those stories.
How do you mess up the greatest used car market in history? And how do you not make money when that's happening? If you can't manage the greatest market in history for used cars, then I don't know how you're ever going to make money, frankly.
And that son, man, talk about a lesson in defined risk, folks. Now, listen, I was reading an article, Kevin, we're jumping around, folks. This is Carvana we're talking about now. The son, Garcia III, his wealth was up to $6.7 billion at one point of the peak. And I think he's down to 100 million or 80 million. And listen, we'd all love to have 100 million, folks, but it's not 6.7 billion. And there was no defined risk there, Kevin. And we got lessons everywhere of companies that, whether it was, the likes of Roku, right? Everybody's watching streaming television and they tank it. The likes of Peloton, right? Everybody's buying electric equipment and they just tank hardcore. Lessons everywhere in this market. Kevin, I appreciate the time.
There's no better example of that then companies don't always last forever if you make mistakes. How? My office is currently in the old Marshall Field storage facility when they were a massive retailer and company. And so that's where my office is now, Tommy.
I sadly I'm getting old enough, Kevin, that I got a few retailers in my mind when I was in my teens, in my ages that aren't there anymore. And they're, whether it's Bradley's. Do you know Bradley's, Kevin? Do you know Bradley's? Nope. No, that was a staple in the Northeast when I was a kid, man. Bradley's. I'd go there with the family. They'd put the toys on the layaway, right? And Bradley's would come back and pick them up in a month or two, man. Just crazy how time goes. Kevin, I appreciate the time as always, man. On a busy, action-packed morning, and we'll look forward to the program Fast Market at 12, man. And we'll talk to you tomorrow.
Have a great day, Tommy.
You too. Folks, tune in. It's going to be a fast market today, man. And defined risk, folks. There is a lot of value to defined risk. Check out the program. We got a great market for it. And even if you don't trade options, folks, okay? Options can sometimes be used if you're just an equity trader. There's so many ways that you can use them, even if you understand them, that can help define your risk, okay? So check it out, please. Kevin does an outstanding job. I've learned so much from him. The team, Tom White, they do an outstanding job. They walk you through hypothetical trade setups, folks. They're a sponsor. I know I'm biased. I tell my friends, I tell my family anyway, if you want to get into options, check out their program, 12 o'clock every day. We're fortunate to be able to simulcast it right here on Tiger TV. And it's going to be an interesting morning, man. We get the S&Ps negative by 11. Got a little bit of a drop-off, man. But guess what? We got such a quick move going on here, folks. I was talking about this in my newsletter yesterday. Even if you just take where we were on Wednesday, not even including the CPI spike, okay? A 382 of where we were last night, talking about 100 points up. We've moved so fast. We'll talk a little bit more about this when we get back, folks. Stay tuned.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got an S&P negative by 9 points. Make it 10 points in the red. You got the NASDAQ 100 negative by 70 right now. And yeah, it's been a one-way trip, folks. And I'm looking for some negative prices from here over the next 3 months, man. Very tough to figure out where the inspiration to buy is in this market, right? We got a long ways to go. Yes, we might be out of the woods with inflation, but folks, you're talking about 6% core, 7% headline, right? I'm ballparking. That's not completely out of the woods. The numbers might indicate it, but even when they do, you know what's next? Recessionary fears, okay? And that's where you may see the relationship start to change with the dollar index as other banks get into the game of raising rates, right? With currencies, commodities, how they're going to play into the thing, with yields, the relationship between the dollar and the 10-year. We're seeing a little bit of a dichotomy today going on in that relationship. We got gold accelerating higher. This is a 30-minute chart. Let's put it on a daily just so you can see the pop we have going. Gold's been chopping around between about 1780 and 1820 since about the beginning of December. We're pushing the upper boundary line of that right now. You jump back to the dollar index, see how we're doing on the open. And, you know, the currencies don't trade as dramatically as the equities, of course, because they're trading all night. There's the drop-off for the Bank of Japan. You were just below that level at 7 a.m. this morning. We're trading right now at 104.16. You jump over to the 10-year. Yeah, and we got lower rates coming at you, man. We got the yield in the 10-year, 3.686. We'll call it 3.69%. We'll round up. Are we on our way back to 4? We might be, man, because this has been a quick reversal. And you know, these channel lines, folks, all right? You know, it's tough to see how it can happen when you're in the middle of a counter trend move, right? But in June, when you had the dollar go from, the 10-year trade from 114 up to 122, very difficult to see it selling off to 108 over the period of a few months, but that's what it did, okay? And this channel line could bring it right back down, man. And all you got to do is get to what? 109 to be pushing a 4.5, and this is saying you might even go beyond that, folks. And guess what? That's what the Fed's been saying. So keep that in mind. That is what the Fed has been saying. Higher rates for longer. The market's saying, I don't believe you. Well, guess what? Maybe they're starting to believe, folks. They might just be starting to believe with the action we're getting. But pay attention. We're at a critical point either way. At least you have some area that you can keep your back against the wall in the 10-year. We'll see where that trades. 113.13 right now. The 10-year off by 23 ticks. And interesting, as I said, what do we have? We got higher yields and we have a weaker dollar. Interesting to see how that progresses. All right, back to the Bank of Japan real quick, just to continue the conversation. So this may be an indication, okay, that and this is the line I wanted to get here, and this is some senior investment market analyst at Hargreaves Lansdowne, Susanna Streeter. That's a good name, Susanna Streeter. The decision is being read as a sign of testing the water for a potential withdrawal of the stimulus, which has been pumped into the economy to try and prod demand and wake up price. They've been stimulating the economy. This might be the first step that they may be taking. Now, inflation in Japan, though, nothing like what we're dealing with here, folks, okay? Japanese inflation is projected to come in at 3.7% annually in November. That is a 40-year high. Why? Because their economy has just been in trouble, man. 40-year high, crazy, 1982, man. That's when Japan was just going through the roof, man. They were going to take over the world with electronics, right? Not so much the case. There's a lot of takes on this, okay? It might be a reaction. It might be an overreaction. This might be the first step that they really come in and change the level of stimulus that they have. And guess what? That's going to impact the dollar. And these are the types of things that are going to happen, though, when you have the euro, right? You have the Bank of England and the ECB. They're going to be on a hiking cycle, folks. So if we get to the point that we get inflation under control, our Fed starts to cut, other banks are still hiking, you have higher yields in different areas of the world, assets, dollars, cash seeks out higher yields, that will actually cause weakness in the dollar. What will that cause? That will cause more inflationary tendencies because we'll be buying things from overseas that will be more expensive. That it just illustrates the tough spot that the Fed is in, man, right? Because if And it looks like Europe is in big trouble. So this is going to be a factor, right? I'm not sure how that's going to impact all the markets, but it's one thing you have to keep on your radar, that we are coming to the point in the next 6 months probably that hopefully, right, if things go as the Fed hopes, we're getting a hold of inflation, generational inflation. We're getting a hold of it. We've reached the peak. We're going to take some time to come down. Europe is behind us. So Europe is going to be hiking. That's going to put strength in their yields. That's going to put strength in the euro. That's going to put weakness in the dollar. And that's going to cause inflationary tendencies to be persistent when our weak dollar, okay, is having to pay more for goods that we're importing. I don't know where that goes, man, but it's going to be a wild one. And with that, we got the Dow inching into positive. Well, we'll make it red. Dow flat, Russell negative by 4, S&P's negative by 10. So as I was talking about in terms of this pullback, you know, we're not going to go down forever, folks, okay? And this has been quite a one-way shot. Now, you back things up. Even if you take the spike out of the CPI number, okay? Now, there's a lot of validity when you look at this spike, that was an irrational spike. First of all, you had somebody front-running the spike, okay? I think we're all familiar. If you haven't, there was actually an acceleration just prior to 8:30 on that CPI number, where the first bar, I'm going to zoom in, this first bar was prior to 8:30. This is a 30-minute bar, and most of it took place actually in just a few minutes right prior to the number being released. But very rarely will you see the S&P accelerate 40 to 50 points with any supreme volume prior to the economic number. Obviously, people out there saying maybe that somebody had the data. Okay, so then what happens? What happens is that built momentum, and it probably carried this thing even further than it deserved to go. Because yes, it was a inflation number that was missed expectations, but it wasn't anything that said we're completely out of the woods. And guess what? By noon, we were already back to prior to the 8:30 number. So take that high for what it's worth. It probably was an irrational high. And even if you don't include that spike high, folks, okay? We just traded from 40.90, right? Let's see what we're at. 40.90 down to, and even if you just take where this thing was at the lows of yesterday, okay, where we're chopping around right now, like 38.25, right? 38.25. S&Ps have traded down 265 points since then. And that is a 6.5% drop. And again, that's not cherry picking the high of Tuesday, man. That's cherry picking just the high where you were chopping around before the Fed on Wednesday. So we have the market down 6.5% in less than a week. And that's not cherry picking the high, which was 100 points higher. Okay, that's 100 points higher. I'm not even including. And still the market's down 6.5%. Point being, we're going to get some bounces here at some point, folks. And if you just get a bounce of the 382 of this market, what it's done since Wednesday to Monday, okay, you're talking about 100 points higher. So we're going to get some fast moves in this market, man. Be ready for them, folks, and we'll see where we go. Let's jump around to some of the FANG stocks. As we come into this next break, we got Amazon catching a little bit of a lift, up 42 pennies. That's been quite a slide, man, from 96 down to 85. You even take the Wednesday number from 93 down to 85. Amazon was that down 8% or somewhere from that number. We got Apple right now in the red as well, down 1.1%. Stay tuned, folks. We'll go over some of the other equities that are moving this morning. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And the headlines keep persisting. I'm actually amazed, and I love Bloomberg, folks. All right, they got some of the best info out there. If you don't want any of the political fluff, you want some great financial news, listen, there's a bunch of other great ones out there. The Journal, New York Times Business, they got some great stuff. But I'm actually surprised that Elon keeps getting top billing over his Twitter escapades at Bloomberg, because he really doesn't deserve them. It's kind of just a sideshow. It's the greatest reality television show going on out there right now, folks. But yes, it matters to Tesla. Yes, it matters to Twitter. Yes, it matters that he's the richest person in the world. Beyond that, it really doesn't matter, man. Everybody gets worked up over Twitter, man. I know a lot of people enjoy it. It's now a private company. So, you know, it's not really something you can even buy yourself into. Tesla, a public company, different story. Tesla shares down another 3.2% today, man. Who knows what's going on with Elon? The headlines are out there that he is looking for another CEO. Maybe he's just trying to save his job at Tesla at this point, man. Down, I mean, you see the gap, man. This is a daily. Yesterday, you were above 150. Today, you're down $5, man, to 145. You back up Tesla. And you are now trading at prices that this thing was at in August of 2020. And folks, this was an astronomical rise, man. There's nothing to say you can't give it back. You're dealing with multiples that are fanciful, to put it lightly. Even coming into COVID, folks, Tesla was at $58, okay? And you want to see something scary, okay? Tesla was $11 in June of 2019. You're at 145. Tesla was doing fine then, okay? They have a lot of issues going on with China. China's got a lot of issues they're not telling the world about right now. Who knows really what's going on with China, okay? They're going to be dealing. You don't just deal with one wave of COVID, even if it gets out. We've seen it before, right? It gets out, everybody gets sick, they go home. There's other waves that can happen. China's going to be dealing with that now. They're going to be dealing with it like the whole rest of the world has for 3 years. And yes, you can say, well, they'll just deal with it and they'll march on to a certain degree. But it's real workers that will get sick and could shut down factories. And that is part of what this is dealing with, along with many other things. But this has been a one-way trip, man. We were just trading at 314. This is a weekly. Okay, we were just at 314 3 months ago. And you're more than cut in half. Let alone that Elon managed to go after Twitter when this thing was pushing 375. And now we're at 145. Be careful, man, because no matter what happens, okay? Yeah, there's the board is supposed to be doing their duty, man. The board, there's a real conversation about the board of directors in general. A lot of times the board isn't doing their job, okay? very difficult to, prove that in any way, as in to really come after a board and force them to do things, because there's a lot of judgment calls, there's a lot of nuance, okay? But yeah, there's no freaking way, man, that the board is doing their job allowing Elon to be so distracted right now, my opinion, okay? But that's the deal. I mean, you jump over to a company like Disney, all right, I said this, back in June, okay, they gave Chapek a 3-year deal. Unanimous vote on the board in June that they gave Chapek a 3-year deal. I think it was somewhere in June. Well, Disney was already at $92. They were already in the crapper, okay? My guess is what saved them is that he said something about what's going to come out the next earnings cycle, okay? And you see the next earnings were pretty decent. The board said, okay, maybe this is the turnaround, quite a pullback, and you got quite a pullback indeed. So they give him a guaranteed 3-year deal in June, and then they oust him a few months later. And who's on the hook for that 3-year deal, folks? The shareholders, to the tune of tens of millions of dollars. Now, listen, a company like Disney that's worth, market cap wise right now, $157 billion, okay? Yes, you're making the case that they came in and they secured their CEO. That's not the board doing their job, man. Okay, in any other universe, there's just this corporate governance deal that's lacking in dramatic fashion lately. And I say lately, in the last 10, 20 years, okay? In no other business would you guarantee a CEO a 3-year deal and then fire him a few months later and pay him all the money. You know what that meant? That meant that he was already on thin ice. Well, if he's already on thin ice, folks, what's the threat? What's he going to do? Go leave, right? This is why executive pay is out of whack. Disney's a great example of why executive pay is out of whack. You had their CEO gets a guaranteed 3-year deal in June. Meanwhile, the company already knew they were in trouble, and they fire him a few months later. And you had CFOs. You had their CFO coming in saying they don't even have faith in him anymore. Well, why'd you give him a guaranteed 3-year contract? And it's a little bit of a rant, but it takes place everywhere. Okay? And this was one of the cleanest parts of what was going on. The stock was already at $92. Well, they fired him when the stock was at $92 anyway. Okay? So the stock didn't go lower. There was no reason to do that. Why did they have to guarantee that money? Chapek wasn't going anywhere. You think that they had to secure that guy? He was the only guy to lead Disney, and meanwhile everything was going on. What's going on? No. It's a rubber stamp approval. Pay continually goes up for executives, and that money comes from shareholders or from the money that you could use to pay the people who are working for the business. Those are the two things. Or capital investments, right? It comes from the company, folks, and the shareholders own the company. It baffles me. That one in particular is so easy to see. Yeah, and then you want to get into that case. So that's a great conversation, Duffy, right? He says, worst case is Meta. Dual-class shares with Boy Wonder maintaining control. Now, here's a great example of this, okay? This is a issue of shareholder governance, in my opinion, okay? And that is where shareholders are not doing their due diligence, as in you can't fault the company if they can sell the shares, right? But I think it's going to backfire in an instance, as in if somebody's willing to buy those shares that have no ownership voting rights whatsoever and the company can sell them, well, then that's the case. And maybe you can make the regulation that shouldn't be the case. That one gets a little bit more difficult, in my opinion, okay? Because it gets a little bit more difficult for obvious reasons, as in dictating how you can do that. As long as people are willing, you can't protect a fool from his money and parting, as the expression goes, right? And if investors are willing to take an ownership position in a company that comes with no voting shares, should we make that illegal? That's a little bit tougher for me. The cleaner conversation is, what are the boards doing when all of this stuff is going on, folks? What is the board doing giving Chapek a 3-year guaranteed deal and firing him a few months later and saying, but take that money we just gave you? That's unacceptable. Unacceptable. Yeah, and I don't know. That's an opinion. If Zuck was fired, Meta would soar. I don't know if that's the case. And I don't know if that's the case longer term either, to be fair, okay? Facebook, they've gotten hammered, man. Let's pull up Meta real quick. And, folks, get in the den. We get so many great traders in the den, man. Like I said, it was rocking last night. It's $1 for the year, folks. Check out the Tigers Den. That's only to make sure that we can validate everybody's that they're real people, so we're not getting spammers in there left and right. And yeah, we got quite a fall off. from grace. They're dealing with a lot of woes all at once, man. They're dealing with privacy concerns. They're dealing with the ability to track people and target them via advertising. They're dealing with the fact that Zuckerberg is all in on virtual reality. In the long run, that may be the play, though. And that's the argument for some of these companies, especially the growth companies, right? That there need to be control in order to make the decisions necessary for longer-term growth that investors might not be willing to make in the short term. So they're two conversations. They're great conversations, man, but corporate governance, lacking. Tesla. I mean, Disney. I can name a million others. Market sliding, S&P's off 23. One more segment, folks. Come on back.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We have the S&Ps off 18, and remember, we're still a solid 25 points off the lows that we had last night. 38.26 right now. NASDAQ 100 off an even 100 points, about 50 points off the lows we got last night. You get the Dow was briefly positive for a moment on the open above 33,000. So much for 35,000 on that spike on the CPI number last Tuesday. Dow negative by 72, the Russell negative by 4. We jump to commodities. Gold continuing to run, man. Gold at $18.21. You're up $24 in the gold contract, folks. If you haven't haven't checked out my dad's Gold Report, great time to do it on the Gold Report. Check that out on the front page of TFNN. And what do we have? We have rates, higher rates. We got the 10-year. We'll call it 3.7%, the yield on the 10-year. 3.695 is what I got on my chart to be exact. We'll call it 3.7%, the yield on the 10-year. Just making session lows. And yeah, they're talking about Kathy Wood over there in the Tigers Den, man. She just keeps buying all the way down. Negative 0.4% today. We just hit 31.70. Pretty sure that's a 5-year low, 31.70. Let's see what the lows were in COVID. 33 was the low during the COVID low. Yeah, and I don't even got it on my chart, folks. We are at levels 31.70, the lowest level. That's a 5-year weekly going back. What do we got to do? We got to go back on the monthly to find a price level sometime in 2017. 5 years later, folks. What's her time horizon? Is it 5 years or 10 years? Because I think she's got like a 5-year time horizon, and she's flat. During one of the greatest generational shifts to technology in our time ever. And you give it all back and then some. She just keeps buying on the way down, man. She was buying Tesla a few days ago. She was buying Roku yesterday. The one thing I'll say about Roku, man, she's buying Square. Some of these charts, man. Look at Square. Look at Roku. Look at Tesla. Teladoc. Whew. I mean, she's got the where things are going, man. But whew. The one thing I'll say about Roku is maybe they get taken over eventually. That's the saving grace there for Roku. But who knows when that may happen, folks. Folks, thanks so much for starting your trading day off with me. Stay tuned. We got our man Basil Chapman coming up next, folks. Live programming after that. It should be an interesting one. Have a great Tuesday, everybody. We'll talk to you tomorrow.